Good afternoon. Welcome to the second instalment of the Pearson Ham quarterly van webinar. My name is Sam Pompilis and I'm an insights consultant here at Pearson Ham. Today we'll be looking at the last 3 months in the van insurance market, as well as some longer term views as we approach the end of 2025. Also a look at what's to come into 2026. If you have any questions, there is a chat, so feel free to put them in there. I will try and cover them at the end. If not, I will get back to you individually. So here at Pearson Ham, our mission is to help our clients succeed through better pricing. We work across multiple industries, including insurance. And insurance, we do this through the market tracking of various markets, which allow our clients to identify the impact of performance to inform better decision making. So when we're looking at how we run our products, we have a live consumer panel of genuine customers who provide their personal details and risk profiles. We then run those people through the price comparison websites every day to collect prices, and we have permission from all 4 of the major PCWs to do so. These panelists are on a rotation, so we're not running the same people every single day, and we break those people after 5 days of rotation to replicate real behaviour, but we do ensure that when comparing prices, it is only done through comparable policies. Once we receive that data, we then cleanse it to remove anonymous movements and remove any outliers. And with this then, we can determine key metrics and put that into daily reporting, which we provide to our clients. So it's not just the van market that we operate in. We operate in also car insurance, home insurance, pet insurance, travel insurance, and also landlord insurance. And if you're interested in any of those areas, please feel free to reach out to one of us too. Nice. Without further ado, then moving on to van insurance. And looking at the last 3 months, we have continued to see a decrease in competitive prices. So that is down now 4.4% in the last quarter. And you can see there month on month, we're seeing decreases ranging from around about 1% in November down to 1.9% in October. And this is something that we've seen continuously since 2024. If we take this back another 3 months, so now looking at the past 6 months, this is following the same trend. So again, continued decreases for the average top 5. That has fallen by 7.6% in the last 6 months. Taking it back one step further then to look at the past 12 months, and again, continued decreases. You can see there every single month, some less, you've got some smaller ones here in the likes of April and July, but more or less every single month decreasing fairly significantly, sort of between 1 and sometimes as much as 3%. So that has now taken prices in the last 12 months down 19%. Slightly longer term view, so this is now going back to July of 2024. And again, similar sort of story to what we've seen in the previous months, continued decreases there, sort of smaller ones in the likes of August 24, April 25 and July 25 of around about 0.5%. But you are seeing some slightly bigger decreases, even 3.5% there down in the end of November 24, for example. So that's now taken prices down 26% since 17 months ago. Next up, this is looking at the sort of the 10 largest groups by rank 1 share in the market. These providers have been anonymized, but our clients would be able to see who these groups are. So if we're looking at what they've done in the last 3 months, you can see the average top 5, the 4.4 that I touched on earlier. When we're looking at sort of this on a group level, we can see that they are all decreasing too, but to a various range of decreases within that. So you've got some on the smaller end only down by around about 1% in the last 3 months, and some who have been more aggressive towards the end of the year, going down as much as 17%. If we split this out then to look at this is first looking at the top 5 providers and looking at their 12-month patterns. Again, you can see a range of decreases by some of these insurers in the last 12 months. So it ranges between -6% and -33%. And for example, the provider who was only down by 6%, a lot of that has come just in the last 3 months. In fact, they were slightly positive as of September 2025 on a 12-month view. On the flip side to that, the provider who's been down 33%, you've seen consistent decreases from them throughout the year. Looking at the next 5 providers, similar sort of story in that there is decreases throughout, but there is a sort of a tighter range of decreases within that. So ranging from around about 17% down to about 20% down. So a lot tighter cluster there between those providers. We're also able with our data to segment the price movements. So first up, we are looking at annual mileage. And you can see the various groups that we've split this into, but there doesn't appear to be much variance when looking at annual mileage. So it's only sort of between about -18 and -20% in the last 12 months, with all groups fitting into that price range. We're also able to split things out by the vehicle usage. So again, you can see there not too much difference in the price changes in the last 12 months. We are seeing sort of about 15% down for those using haulage and about 20% down for social only. And in fact, in the last month, we did see a slight uptick for vehicles used for haulage. Next up, we have region, and again, similar sort of story, not too much variance when looking by region. The area that saw the smallest reductions would have been the northeast so far this year, so that's down about 17%, and London saw the biggest, down 21%. But again, not too much variety between all regions listed there. We're also able to segment this by driver age. And again, a bit more variety here. So we've got that ranging from about 16% down all the way down to about 22% down. So the groups that see the smallest price drop would be those aged 61 to 70. And those who have seen the biggest are the younger drivers there, those aged under 26. Now we're looking into one specific provider. This would be the provider that has had the biggest decreases in the last 3 months. So their decreases in the last 3 months have averaged -17%. And it's interesting when we split this out by driver age to see the differences between what they're doing and what the sort of the market top 5 average is doing. So for one, there's a massive difference in the price change, but also in terms of who's been targeted with those changes too. So when we look at provider 1, we can see that the largest reductions have been for the middle-aged drivers, those aged 41 to 50, who are down 18.4%. As well as that, you have those aged 26 to 30, down around 18% too. And those between 31 and 40 and 51 to 60, also down by about 17%. And those who have received the smaller decreases for provider 1 would be those aged over 70 and the younger drivers there, under 26. By contrast to that, however, when we're looking at the market top 5 average, we're actually seeing that the bigger decreases for them come on the two tails. So you've got the younger drivers there at 5.4%, and also the over 70s at 4.7%, and the 61 to 70s at 5.2%. And the ones that have seen smaller decreases are the ones that saw the bigger decreases for provider one. So the market top five, this can show that it can sort of blend over some specific sort of targeted price changes by some of those providers that we regularly see at top of screen. This is then looking at providers one price index compared to the top five over the last 12 months. And actually, if we're looking at them right up until September, they were largely in line with what the market five was doing. And it isn't until the last couple of months of the year that we've seen provider one opt for some significant pricing decreases, totaling around about minus 12% between October and November. Next up, this is looking at a separate provider, but this is a provider who has multiple tiered products within their group. So you can see here on the left, they have a standard, economy, and a premium tier. And if we're tracking what those prices have done in the past 6 months for those three tiers, they are largely moving in the same direction, but the economy tier has had smaller decreases than the other two tiers. And we can see that then that impacts the median prices of this provider when looking at that compared between November 2024 and November 2025. So whilst the median price has fallen across all tiers, the actual gaps between the economy and the standard tier has shrunk from 44% through to 38%. And the gap between the standard and the premium has remained largely the same, around about 2.5%. There is another provider that we can look at that also has tiered product price movements. So this is provider 10 in the tracking. And so again, when we're looking at their pricing for the standard, economy, and premium tiers, again, all moving largely in the same direction over the past 6 months, following a similar sort of trend line. And if we're looking at the median prices, again, they have all decreased, but we have started to see the price differential sort of get bigger there between the economy and the standard tier, and also between the standard and the premium tier there. So the economy tier gap rose from 10.4% out to 12.3%, and the gap between the standard and the premium rose from 6.2% out to 10.5%. And then just to finish up, having a look at comparing both the motor and the van markets, we have noticed that, and do get asked questions about if we are seeing similarities between what the sort of the top prices are doing in motor and what the top prices are doing in van. So this is a 12-month view of those top 5 prices between the two markets. So if we look back towards the end of 2024 and into the start of 2025, we did see that van was decreasing at a sharper rate than what we were seeing with motor, despite motor also decreasing throughout the beginning of 2025. When we get through to November of 2025, we can see that in a 12-month view, the van market 5 is down by 19% compared to that of the motor to be down by around about 13%. So a slight difference of around about 6% between the two of them looking at a 12-month view. And if you look here at the top line, where of the motor market, you can see that has started to flatten out in the last couple of months, suggesting that there could be a hardening in the motor market. Van as well in the last month has slowed down slightly, and whether or not that means that is following the trend of motor and is also hardening is one we look forward to keeping an eye on into 2026. Nice. So then if we're looking ahead at sort of what's to come for the rest of the year and into 2026. We can start with looking at falling premiums. So as I was just touching on there, are we expecting to see the market harden? Are we going to still see rates come out at top of screen and further down the results page in the van market? That remains one to be seen. Obviously, in the last 3 months, we've seen a continued decrease of around about 4.5%. So one to watch into 2026 if this carries on. We can also think about the electric van market and the slow transition that is currently going on towards electric vehicles. If the EV uptake accelerates, insurers may begin to reprice accordingly to reflect the different repairs and risk costs associated with electric vehicles. And we can also look at theft into next year too. So there is a persistent theft risk, which adds pressure onto insurance costs and risk exposure. Around 40% of stolen vans were recovered by the police last year, and tool theft from vans is also rising too. So insurers may start focusing on pricing based on enhanced security of some vans and better pricing for those with trackers, alarms and immobilizers, or may increase premiums for those who are in high-risk demographics or areas. And then finally, we can also look at market consolidation. So we have seen in motor recently, which would also impact van, Aviva's recent acquisition of Direct Line, and further consolidation within the market could alter competitive landscapes and pricing strategies for commercial motor insurance. Nice, that brings us to the end of the webinar. Let me just check the chat for Q&A. There are a couple in there that I will take offline and report back. Thank you all for tuning in and look forward to seeing you on the next van webinar in 2026.